US dollar is on a tear, strengthening around 11% since the start of the year, and for the first time in 2 decades, reaching parity with the euro. Having said that, we'll be looking at one of the World Bank blog posts, and it discusses on how a strong dollar impacts emerging markets. This demonstrates most major currencies have fallen against the greenback or USD. Among other currencies, Sri Lankan rupees have greatly depreciated, approximately 75% it has been depreciated. Among other currencies which have depreciated include Turkish lira, Ukrainian, Argentinian, and Japanese currencies. On the other hand, Mexican peso, Peruvian, Brazilian, and Uruguay currencies have all appreciated against dollar. Dollar is strengthening primarily because there is strong demand for dollars. Economic outlook for most economies points towards a major slowdown. This indicates, compared to basket of currencies, USD has gained about 14% since last year as well. We can see this trend beginning of this year, and this gives some of the major economic events across the globe. These data are as per Bloomberg. Now we'll be discussing how following facts affects emerging markets. First, debt worries. Many countries, especially the poorest, cannot borrow in their own currency in the amount or the maturity they desire. Lenders are unwilling to assume the risk of being paid back in these borrowers' volatile currencies. Instead, these countries usually borrow in USD, promising to repay their debt in USD no matter the exchange rate. Thus, as the dollar becomes stronger relative to other currencies, these payments become much more expensive in terms of domestic currency. Another aspect is growth concerns. As the US Federal Reserve hikes interest rates, other central banks also should raise their interest rates. Investors must be given a reason for higher returns to invest in an emerging market rather than move their money into less risky US assets. On the other hand, central bank obviously wants to protect foreign investment in the domestic economy. But on the other hand, rate hikes increase the cost of domestic borrowing and have a damping effect on a growth as well. Third aspect is trade troubles. USD dominates international transactions. Firms operating in non-dollar economies use it to quote and settle trades. Many developing economies are price takers and are largely dependent on global trade. A strong dollar can have major impacts on them domestically, including spiking inflation. In conclusion, we can note that countries have few options to address these problems. In the short term, these issues are best dealt with preemptively rather than reactively. To prevent the next crisis, countries should act now to shore up their fiscal position and engage in sustainable borrowing. Having said that, we'll be concluding the presentation. Thanks for watching.